What's up everyone, it's Scotty with MoneyVest. So in this video, wanted to break down our stock analysis metric and our system basically. And I really want to kind of appreciate each and every one of you in our community. And again, this is not an individual effort, but really I consider this to be a very much of a team effort, because at the end of the day, it's really kind of all of us understanding the company, what they do, and also poking holes in the type of analysis that we conduct, so that we don't really miss out on any potential blind spots or opportunities in the first place. So what I've done here is I've basically gone over my previous videos on best stocks to buy, I'm buying these stocks, or whatever it is that I've kind of created in the past few months to a year. And I've kind of really compared the stocks that are being talked about in those videos, the market price that they were trading at versus where these stocks are today. And I've never been more confident in our analysis, because when you come to the channel, when you come to our MoneyVest channel, I'll never sell you on this pipe dream of 10xing your capital or 100xing your capital on any type of speculative AI stock or penny stocks or crypto tokens or whatever the case might be. Even though that might get a lot of clicks and views and attention, my goal here is to teach you in a more educational sense on what works in the markets over the long term. Because when we talk about, let's say, speculative stocks that are not really generating any cash flow or income or profitability, that may work out 1 in 100 stocks that may actually end up working out, but 99 companies may actually end up failing, because that's just the nature of the market. It is very competitive. It is very cutthroat. It is not that easy to be successful in business in general and to become profitable. It's very, very difficult. That's exactly why it's important for me to kind of help you understand that profitability, cash flows, revenues, high quality businesses with good balance sheets is the way to go for long-term success, because that's more predictable and that is more consistent, so to speak, when it comes to investing success. So I hope you all enjoyed this video, and I need your help in this type of analysis because I want you all to go back to my videos. So basically go back and look at my old videos, and if there's any stocks that I have talked about that have not really performed all that well, let me know. Of course, PayPal is going to be at the top of that list because PayPal is still taking its sweet time to actually perform. But like I said, not every company is going to be perfect. If you talk about, let's say, 100 companies using my system, using my sort of MoneyVest metrics and all the things that we look at, I'm very confident that majority of them, well over 80 to 90% of them, are actually going to do well. And by well, I mean not really, NVIDIA type well, but they are going to do well, meaning that they are going to perform somewhat decent to exceptionally good over a certain time period. Yes, there's going to be some laggards. There's going to be some companies that don't necessarily meet those up to those marks and performance-wise. PayPal is a prime example. But the bottom line is that even then, there is going to be some solid backing of valuations and fundamentals for those businesses. In other words, very, very, very low chance that they actually go bankrupt. So this right here are some of the videos that I wanted to go over. So these are, again, I basically searched, best stocks to buy, MoneyVest, MoneyVesting, because that was our previous name. And I basically go over all these sort of videos from the past and try to understand, okay, what are companies that I've already talked about and how have they performed? So this right here is a video from August of 2023. Okay, time to buy this stock down 30%. And this is a video that I'm talking about Technoglass. Okay, so TGLS, Technoglass was one of the companies that I believed was really good. It is selling glass, that is correct, commercial industrial glass products that they put on buildings and towers. And we talked about it back in August of 2023. You'll notice that August of 2023 was trading roughly in the $32, $33 range. I actually talked about this specifically in that video, how $32.50 is actually going to be one of the best prices for Technoglass. It actually dipped way below that price point. So you'll notice that actually in October of 23, it dropped to as low as $28, right? So $32.50 to as low as $28. That was kind of like the range that we talked about. And since then, of course, it's done, really well, up almost 60%, because this is a company that at the end of the day has good revenues. You can see very good profits, right? So margins are well over 20%. It's even got good balance sheet. So if you come over to statements here, balance sheet, you'll notice that only $48 million of net debt. So a lot more cash here versus the debt levels that are kind of equal to each other. We do also have very good free cash flows for this business. If you come over here and if you remove everything, so just deselect here and just put add free cash flows, you can see over the last 3 years, very nice, consistently growing free cash flows. And the valuation was also quite reasonable at 11 times earnings, a little bit under 3 times sales, a little bit over 15 times cash flows, and earnings expectations are also expected to grow, right? So once again, a lot of the things that we look for in companies, Technoglass met that criteria, and it has done really well, up 60% in the last 6 months here, 5 to 6 months. And not to mention the shares outstanding also has been very, very flat and stable, right? So that's number one. Number two, this right here, I'm buying this stock now, massive 2x potential. This is a stock, this is a company that we talked about literally back in October of 2023. So not only 6 months ago. And this was not only a company that I absolutely love, but is a company that has performed incredibly well. And that is going to be ASML. So ASML, my fair value at the time was in the low 500. So I basically talk about this, and I'm going to let this video talk for itself. So I'm going to shut up now and let this video talk. Discount rate. So I want to be very clear, we're using an 8% discount rate here for the market. And even then we get a 14% as rate of return because we've got a 10% margin of safety built in. So that's already discounting the value even further. And we get a fair value of $596 with a market price of $582 and a 2.5% undervalued, right? ASML would be argued that it's undervalued at these prices. So that's something that I want you guys to always remember, is that, of course, these two inputs can change the fair value dramatically. But because, and I'm a little bit more conservative, sub 500 is what I'm really paying attention to. I would love to dollar cost average at those prices and buy more heavily. But even at these levels, as I pointed out before, even at these levels, 580s and 590s and, in the 500s, in my opinion, at least, given how it checks off most of the boxes, given how solid trajectory it's on, ASML makes a lot of sense. So 500. So ASML makes a lot of sense. Even in the 580s, of course, I mentioned that, low 500s would be chef's kiss. But if you come take a look at where ASML is today, well over $940 per share. So it's almost practically doubled from those prices since we talked about it back in October of 2023. So this right here is basically when we were talking about it in the 580s. And from those levels, it's gone up over 67, almost 68%. In the profitable zone. And again, we go over all the metrics, right? So these are all the metrics that we basically go over, growth and profitability wise. We're looking at all these profitability, revenue, cash flow margins, and all that stuff. Financial health, we're looking at assets and liabilities, and cash versus debt, and net debt and current ratio, and then of course efficiency and valuation. All these metrics that we look for really minimizes that potential downside risk here. Like I said, not every company is going to be performing this well, but the idea is it's really going to minimize our downside risk and really help us figure out the best, highest quality companies. This right here is another stock that we literally talked about 1 month ago, right? So 1 month ago, buying this stock on the next pullback, high potential. This is from January 14, 2024. I specifically mentioned how Merck could be a stock for 2024. It's already getting started on that move here. So $118 is when this video basically came out. And if you take a look at where Merck is today, well over $130. It's pushing up another 75 basis points. So this right here is basically when the video came out, and since then it is up another 11%. A lot of people mentioned it's too late, you're too late, specifically talked about how too late now. You should have told us when it was at $80. Well, it's already up 11% since this video. And again, it's all about the analysis. It's all about looking at specific companies that are doing well based on the quality of the business itself. This right here is going to be Starbucks. Now, Starbucks is the only company that hasn't really moved much that I've talked about in our recent months here. 1 month ago, time to buy this dividend stock. I may buy. And again, Starbucks hasn't moved much, but again, a very, very high quality business. The only thing that concerns me a little bit about Starbucks is the high levels of debt that it carries, which we also did discuss in our community as well. And finally, this right here is a video from about 11 months ago. So from March 1st of 2023, again, 5 non-FANG stocks to buy targets included. And these are non-FANG stocks, and these are all very, very high quality businesses. AMAT, which is Applied Materials, Visa, Charles River, Adobe, and PayPal. PayPal is the only one that has underperformed in the last 11 months when this video came out. But if you take a look at AMAT, up a little bit over 60% from this video. So again, from March 23 to where we are at the moment, this is also up a very, very nice. So if you go back March, April 23, this is up 87% actually. And Visa is also hitting new all-time highs. A very, very nice move to the upside from its March 2023 lows of well over $208, up 36%. Same thing is true for Charles River. I think Charles River might actually not be super high, but it has pushed higher from March 2023. So this right here is around when the video came out, up 34%. And then finally Adobe, which has done really, really well in terms of the SaaS stock. Here, again, going back to far as March 23, it's up a little bit over 73%. PayPal, like I said, is the only stock that has not really gone anywhere. Now, again, there might be companies, there might be stocks that I have talked about that haven't really gone anywhere. Very clear example is Starbucks, very clear example is PayPal. But the idea is that it's very, very important for us to focus on quality over quantity. There might be fewer stocks. It's much I would much rather look at fewer companies but higher quality companies and stocks rather than look at 100 different stocks and invest in 100 different companies without really doing any due diligence or analysis in these companies. Now, I'm not cherry picking this data. Go back, look at my YouTube videos. If there's any companies or stocks that you find that I've talked about that haven't really done well, I need your guys' comment down in this video so that I can go back and take a look at what went wrong. And really, it helps me become a better investor as well, because what are things that I actually missed out on when I originally did the analysis, okay? It's really important for me to learn from my previous mistakes and really go back and look at, okay, I did a video on this stock. I talked about this company as a potential buying opportunity and it didn't really do well. What went wrong? Where did I go wrong? What is it that I messed up on? And really that helps me understand and get better and learn from my mistakes in the past. So let me know in the comment section down below. But really the idea is look for high quality businesses, cash flows, profitability, revenue, all that very, very important for long-term investing success. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel, and as always, happy investing. I'll see you all in the next video.